Good morning, fellow investors. I am thrilled today because my guest is Rudi Fronk from Seabridge Gold. And if you like big projects, large projects, big numbers, then you have to love Seabridge. It is also one of my largest position. So thank you for being here.
Peter, always great to be in front of the screen with you, and I look forward to today's conversation.
Oh, thank you. Thank you. We have a lot of questions, and also my subscribers sent me questions. But I thought before we start with those, could you please, may I ask you to set the stage, cover the basics, and introduce the company for new investors? What are the basics? What are you working on? And you could use the current metal prices if you like.
Okay. Yeah, so just quick by background, I'm a mining engineer. I also have degrees in economics and finance. I've built mines around the world, some in third world countries, and I've had mines that I built expropriated. Um, my colleagues and I formed Seabridge in 1999, and at the time, the gold price was trading at about $260 an ounce. We believed it would go substantially higher. And our goal was quite simply to create a public company that provided maximum leverage to a higher gold price. And we've done this through the simple concept of looking to grow ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide our shareholders on a per share basis, the better our share price should do if and when the gold price goes higher. Right now, along the way, we're fortunate that one of the assets that we acquired in the early days, a project called KSM, has now evolved into being the largest undeveloped gold project in the world. And if you ignore our gold and look at the copper at KSM, it's actually the third largest undeveloped copper project in the world.
Wow. And what are the numbers? Is it economical?
Oh, very, very, very much so. So it's huge. We have five deposits
Okay.
there, four of which have more than 2 billion tons of economic resources. The five deposits vary in different levels of gold relative to copper. Three of the five deposits are more gold rich. Two of the five deposits are more copper rich. If you look at the total resources, though, between all five deposits, KSM hosts 160 million ounces of gold in all resource categories, of which 47 million ounces are proven and probable gold reserves. It hosts over 59 billion pounds of copper, over which 7 billion pounds are proven and probable reserves, and it hosts over 900 million ounces of silver. By scale, nothing comes close to it. From an economic perspective, we completed a pre-feasibility study, our most recent one anyway, in 2022. In that study, we used a gold price of 1742 an ounce, a copper price of 353 a pound. It showed a project that had an initial mine life of over 30 years, producing over 1 million ounces of gold per year and 178 million pounds of copper at an all-in cost of production of about $600 an ounce. The NPV on those metal price assumptions was about $8 billion US after tax. The IRR was about 16%. If you take that same study and update it with today's metal prices of gold and copper, silver, and molybdenum, the NPV jumps from 8 billion to 33 billion. The IRR goes from 16% to 34%. A project that is so robust, the amount of cash flow this project will generate out of the gate is phenomenal.
Thank you. Thank you very much for this summary. And so last November we met and in New Orleans. We had a nice conversation. But could you please summarize what happened since 2024, the summer of 2024, since the substantially started designation was achieved?
So we have made it very clear for a number of years that this project is beyond our capabilities. A company the size of Seabridge should not be looking to build multi-billion dollar projects of this scale. So we've made it very clear that our intention is to bring in a large mining company as a joint venture partner. To get to the point where we can successfully bring that partner in, we had a number of de-risking things we needed to do. First and foremost, we need to get the permits, which we now have. Those permits were set to expire in July of 2026, which was a risk factor to potential partners. Fortunately, in British Columbia, there's a concept known as substantially started, that if you're able to achieve that designation, your permits are good for the life of the project. So we went out and secured about $500 million Canadian in funding that we put to work in terms of building roads, building bridges, tying into the power grid, building fish compensation area and such, and then received that designation in July of 2024. Unfortunately, that designation was then challenged by one splinter group NGO and a First Nation, a small First Nation in the region. So we had to go to court to actually defend our substantially started designation, which we did last October, and we are expecting to get that decision over the next month or so.
That's very soon.
Yeah, very soon.
Yeah, and thank you for the Christmas present we received. Yeah, we will receive it probably later this year, but you spin out the Courageous Lake asset. What was the motivation behind that decision?
Well, quite simple, to get value into the hands of our shareholders specific to that asset. You know, KSM got so large over the years that any other asset we have in the portfolio is ignored. And here we're sitting with an asset called Courageous Lake in the Northwest Territories that has 11 million ounces of measured and indicated gold resources at a grade above 2 grams. We did a pre-feasibility study at Courageous Lake in 2024 that showed an okay project at that point in time when the gold price was $18.50 an ounce. It showed a project that would have an initial mine life in excess of 10 years, producing over 200,000 ounces of gold a year, at an all-in cost of production of about $1,000 an ounce. The NPV on that study was about $500 million US. If you run the same set of numbers, but using today's gold price, the NPV at Courageous Lake goes from $500 million to over $3 billion. And our view is that our shareholders were not getting any value from Courageous Lake because the market was ignoring that. So what's the best way to drive value? Give it directly to the shareholders in a spin out. So we're now in the process of putting together a separate public company called Valor Gold that we expect to have spun out to our shareholders by mid-2026, which will give our shareholders direct interest and ownership of this asset. And then we'll see how the market determines the value once it's out there away from the shadow of KSM.
Okay, thank you very much. And I would like to switch back to KSM because over the past few years, I heard many times these arguments, it will never happen because it takes too much time, it costs too much. But now it looks like it will really happen. So what changed that make this possible?
Well, I think the de-risking we've done over the years to make it more attractive and answer the questions that the larger companies had. But quite honestly, it's the market environment right now. You know, a few years ago, you're absolutely right. If you looked at the scale of capital costs here, north of $6 billion US to build on a 5-year construction, there are very few companies that have the technical and financial resources to do a project of that scale. Matter of fact, most of the larger mining companies up until recently were maybe generating $1 billion to $2 billion of cash flow a year, with most of that excess cash flow devoted to go back to shareholders in the form of either dividends or share buybacks. Today, those same companies are generating, multiples of what they were generating cash flow wise a few years ago. So the ability for the larger companies in our space to step up and build a project the scale of KSM is now upon us. I mean, this is a project, when you look at the numbers today, the first 5 years of mine life, 5 years, will generate EBITDA combined over those 5 years north of $30 billion. So it's a project that will generate a lot of cash flow, but also a lot of production. The average production over the first 33 years of this project is over 1 million ounces of gold a year and almost 200 million pounds of copper. And that only captures about 25% of the known resources at KSM. So this is a project that is robust from a capital efficiency. It'll be in the lowest quartile of costs, and a project that's going to go on multi-generationally. And if you look at the industry today, the elephant in the room is, at least for the big gold companies, they need new projects because they've done very little in their portfolios over the past decade to figure out what comes next for them. Now they need to start thinking about that, and KSM checks a lot of boxes for those types of companies.
To summarize, am I right that so these big companies, they always have to look for a few million ounces of deposits? It's continuously they have to acquire these little projects. But with the KSM, they get a baseline production for multiple, even decades. So they solve these ounces problem. And then what they acquire above on that is just additional. Am I right? Do I
Yeah,
explain?
correct. I mean, the big companies, they talk about wanting to buy tier 1 assets. There are very few tier 1 assets out there
Yeah.
that satisfies that definition of an asset. KSM is clearly one of them. KSM also happens to be in a very safe jurisdiction. Most of these big companies are comfortable doing business in Canada. Most of them are. It's a project that satisfies the question, can it be permitted? We are permitted. We're ready to go. In fact, we've done a bit of construction. They're looking for projects that have strong social engagement with First Nations. We've done that in terms of the relationships we built over the years with our Indigenous partners is phenomenal, probably second to none. And they're looking for projects that are capital efficient. Yeah, capital costs up front are big for projects like this. We get to look at in terms of scale. How quick do they get their money back relative to the mine life? KSM at today's metal prices has a payback period of 2 years. 2 years. And then they've got decades of cash flow in front of them once they get their money back. So in terms of capital efficiency, it's as good as it gets.
Okay. Thank you. We discussed what you achieved in the last few years, and the last 20 years. But what are the next steps in the next few years?
Well, the next step is waiting for that judge's decision on substantially started. We expect to get that in February, and obviously we expect to be on the winning side of that. Even if the judge comes back and says we want the government to relook at the whether we achieve substantially started, we can then go back with a follow-up application that increases the money we spent on construction activities up to the end of 2024 to money we've spent. We've now put over $600 million into the project in early site construction. So this project, there's no doubt it's substantially started. The next step, though, for this project is final feasibility. A board sanctioned construction decision will not happen until you have a final feasibility that our partner can show to their board to get that board sanctioning to build a mine. So in our discussions with our potential partners, it's to be in alignment to make sure that what we're putting forward now in terms of work programs and project design is the exact same project they would like to see built as we move forward. We started a joint venture process many years ago. We have probably had, over the years, we had 7 to 10 companies looking at the opportunity. When we got substantially started designation in July of 2024, we filtered that down to 3 companies, and we are now discussing the partnership with one company, the one company that's our preferred partner. And the discussions now are centering around alignment on what comes next in terms of work. So they're willing to step in and fund the next set of programs if we expect to be the initial funding in a joint venture agreement.
And would you like to start with the more gold-related deposits or the more copper-related deposits?
Great question. This project, as a mining engineer, I have never seen flexibility and optionality that a project like KSM presents. If you're focusing on copper, you can bring in the 2 higher grade copper deposits into the mine plan sooner. If you want to focus on gold, you have the 3 higher grade gold deposits to bring in sooner. Our current pre-feasibility study focuses on a gold-dominated project, where the first 33 years of mine life, 70% of the revenues come from gold, 30% from copper. Any company that comes forward on this, they actually can tweak the mine life over time and actually take in some of the higher grade copper zones into the mine plan sooner, which will allow this project to move more towards a copper-dominated project. As we now have it laid out, we did the designs of the mine based on recoupment of capital, what gets your money back the quickest, because you're looking at a $6 billion upfront build, but also what provides the best economics in terms of net present values and IRRs. And right now, when you look at the project, focusing on the 3 gold deposits that sit in one deposit is the best path forward to developing this asset. With that said, there is the opportunity to bring in copper sooner than we have in the mine plans right now.
Okay, I'm looking forward to it. And of course, you cannot tell me, or you may not tell me the details, but what can be publicly said about this deal? How should we expect it? In how many steps would you like to get down until 49% of ownership?
Yeah, great question. So we put out the idea of a phased in earn-in by our partner, where they go from 0% today to a majority interest by achieving certain thresholds of funding and advancing the project. We recognize that our partner is going to want control. So as a starting point, we know that 51% is what they're looking for, so they have control of the asset, which means that we have 49%. And that's what we're trying to strive towards. So phase one of this joint venture would be our partner coming in and funding final feasibility, working in alignment with us, also to provide funding that will allow us to continue some of the early site construction activities we have in place, because that's a de-risking that gets us to first production sooner. For that initial investment, the partner will earn a small interest in the project. At final feasibility, then, the partner, within a period of time, to continue to earn to that 51% interest, will have to go out and get a board-sanctioned construction decision. They'll have to go out and secure at least 50% of the project's capital to the benefit of the joint venture in some sort of project facility, probably just through a traditional project debt facility, and then continue to sole fund another agreed dollar amount up to a certain dollar level that'll get them from the minority interest they earn in phase one to a majority interest. Our goal is quite simply to hang on to a meaningful interest in the project, 40 to 49%. We're pushing for 49%, but not having to fund anywhere near 49% of the capital, with whatever funding we have to put in comes towards the end of the construction phase of the project.
Mm-hmm. Okay. Thank you very much. And so if I understand it correctly, then the final bankable feasibility study takes 1.5, 2 years?
And yeah, we think it could be done 18 months, 24 months at the outset. It's a function of, and this is why we're working so closely with our preferred partner on alignment now, to make sure that what goes into the consultants and the different engineering groups that'll work on it is in alignment with how they would look to develop this mine. Mm-hmm. And that whole process on the feasibility, 18 to 24 months.
Yeah. Okay. Thank you. And then you already mentioned then after that 5 years of construction, just to put the timeline out until production in my head. That helps for me. Okay, thank you. And I would like to mention also the Iskut property, because this could be another KSM. Will you have a resource estimate for the Snip North project soon? Is it part of the partnership, or it will stay within the company? What are the plans here?
Yeah, so Iskut is it's an exciting opportunity that we are now finally getting our teeth into to show what it is. Mm-hmm. So in our history, we've gone out and done our acquisitions like KSM and Courageous Lake in a very depressed gold market environment. After we bought those two assets, the gold market did quite well, as did our share price over time. And then the gold market kind of cratered again in 2015 after hitting $1,900 an ounce in 2011 or 12. Gold hit 1,050 in 2015. That was a sign to us, time to start buying again. So we went out and looked at opportunities, obviously focusing on jurisdictions we were in. The Iskut property was presented to us by a banker, and we stepped in and bought this public company for a very low valuation. And we bought Iskut with the belief that it had the potential to be another KSM. Work that was done on that we looked at signaled it had the potential for large gold, copper, porphyry deposits. So we then start to advance the project over the next few years. And in 2024, we actually hit a zone called Snip North that had tremendous mineralization from the surface over hundreds of meters of gold and copper. In 2025, we went back with a 24,000 meter drill program, and every single hole we drilled at the Snip North target hit hundreds of meters of continuous mineralization of gold and copper. Very similar to what we have at KSM and our 5 deposits there. So we are now at the point where we now have enough data collected at Snip North over the past 2 years to go out and define an initial resource estimate for Snip North. We've now hired a independent consulting firm to do that study for us, and we expect to have our initial mineral resource estimate for Snip North by the end of this quarter. It's going to be big. It's going to be a lot of gold. It's going to be a lot of copper. But more importantly, it demonstrates that this could be another KSM.
Music to my ears, I have
Mine
to
too.
say. And I know our time is limited, but I have two more questions, if I may. Being where you are, we simply have to talk about this topic. How is your relationship with the First Nations?
It's very good. I mean, we have impact benefit agreements in place with the Tahltan Nation and the Niska Nation that provide some certainty in terms of contracting opportunities and also a financial interest in the project. We've had those impact benefit agreements in place for many years. When we went out and started or substantially started activities in terms of construction activities, you were sitting with Tahltan wanting the work versus the Niska wanting to work. If you gave the job to the Tahltan, the Niska were not happy and vice versa. So we suggested to him, look, we want to give you all the work, but to do that, we need you to form a joint venture. So they went out at our suggestion and formed the Treaty Creek Limited Partnership, which is a 50-50 joint venture between the Tahltan Nation and the Niska Nation. And through that group that they formed, we've now probably generated over $200 million of contracting opportunities directly into their joint venture partnership. So, and that relationship stay very strong. Matter of fact, if you look at when we filed our substantially started designation, it was also supported by the Tahltan Nation, the Niska Nation, the Gitxsan Hereditary Chiefs, BC Hydro, and all the local communities. So our relationships run deep and solid with the key First Nations in the area. There is one group that seems to not be happy with us. That's called the Tsawwatkikimahasha. They're part of the Gitxsan Nation, who is supportive of us. But the Tsawwatkikimahasha is the group that actually filed the objection to our substantially started designation. So they seem to be the one group out there that, although we continue to fund them in terms of providing capacity funding, they seem to be challenging the advancements we're making on the project as the years go by.
Mm. I think these sort of things happen all the time, and I wish you the best of success for this process.
To put it into perspective, the Tsawwatkikimahasha, if you read their website, it's a band of maybe 30 to 50 people claiming to be their own independent First Nation, not part of the Gitxsan Nation. If you look at the Niska Nation, the Tahltan Nation combined in the region, you're looking upwards of 10,000 people or more. And those are the groups we have the very strong relationships with that we continue to work with and have their support. It's unfortunate, but it is what it is.
Yeah. Okay. Thank you for this summary. And is there something else I should ask? What would you like to add something?
When's the deal going to happen, right? That's the question I get all the time. We were expecting to be able to announce the deal last year, as you know.
Mm-hmm.
It didn't happen. But what I will tell you is the discussions that are advancing with our preferred partner now are going very well. And it has not been announced yet, but the expectation, it's about to come. So I'm not going to put a timeline out there. I've said for many years that terms are more important than timing, but I recognize that shareholders want to know when, and we're doing our best to be able to deliver on that with a partner that checks all the boxes we're looking for.
Yeah, I'm the type of person, and also in my age, I try to accumulate still values within reasonable valuation, and it gives only time for me to buy more of these shares because so I feel after this partnership is announced, everybody will look at this stock as, okay, this will really happen. And yeah, we start to elevate, but we will see.
Time will tell.
Time will tell. We have to conclude this interview, unfortunately, but thank you very much for taking the time to meet with us and answer my questions. I believe it was beneficial for everyone. I always enjoy talking to you. So thank you very much also for all your work and the team.
Totally my pleasure. I look forward to the next time we can talk.
Thank you very much. I hope we will see each other in Boca Raton this summer.
For sure. We will be there. Thank you.
Okay. Thank you. Goodbye.